Most accountants do not realize it yet, but the way they work today is quietly becoming obsolete. And by the end of this video, you will understand exactly how AI is changing accounting forever, and how you can use it to gain an unfair advantage instead of being replaced by it. Stay with me, because near the end, I will show you the exact shift that separates accountants who thrive with AI from those who get left behind. For decades, accounting has been defined by long hours, repetitive data entry, endless reconciliations, and audits that drain time and energy without adding real strategic value. The profession became synonymous with spreadsheets, deadlines, and stress. But something fundamental has changed. Artificial intelligence is no longer a futuristic concept in accounting. It is already here, reshaping how financial professionals analyze data, deliver insights, and support decision-making. The uncomfortable truth is this: businesses no longer want accountants who only record the past. They want advisors who can interpret the present and predict the future. And AI is the tool making that possible. At first, AI entered accounting quietly. It did not arrive as a dramatic replacement, but as a helper. Software started reading invoices automatically. Receipts were scanned and categorized without human hands touching a keyboard. What once took hours now took minutes. And that was just the beginning, because when machines took over the boring work, something unexpected happened. Accountants finally had time to think. One of the biggest breakthroughs AI brought was automation of routine tasks. Data entry used to be one of the most time-consuming parts of accounting. Humans had to manually input numbers from documents that all looked slightly different. This process was slow, error-prone, and exhausting. Today, AI can read and interpret financial documents with remarkable accuracy. It understands invoices, bank statements, contracts, and receipts. It extracts the relevant data instantly and feeds it directly into accounting systems. The result is not just speed, but consistency. Fewer errors mean cleaner data, and cleaner data means better decisions. Invoice processing has also been transformed. Instead of manually matching invoices to purchase orders and approvals, AI systems now do this automatically. They identify discrepancies, flag irregularities, and even process payments electronically. Expense management follows the same pattern. AI categorizes expenses without human input and highlights anything that looks unusual. This creates stronger oversight, while reducing the risk of fraud slipping through unnoticed. Accounts payable and accounts receivable are no longer administrative bottlenecks. Robotic process automation handles invoice matching, policy checks, and posting entries in the background. Revenue recognition becomes faster and more accurate. Cash flow visibility improves. What once required constant human supervision now runs quietly and reliably behind the scenes. But here is where most people misunderstand AI in accounting. Automation is not the real revolution. It is just the foundation. The real power of AI begins when it moves from doing tasks to creating insight. Financial analysis has entered a new era. AI algorithms analyze historical data patterns at a scale no human can match. They identify trends, correlations, and risks hidden inside massive datasets. Forecasting and budgeting no longer rely solely on intuition and static spreadsheets. AI models continuously learn from new data and adjust projections in real time. This allows accountants to create more accurate budgets, test multiple scenarios, and anticipate financial outcomes before they happen. Imagine being able to tell a business owner not just what happened last quarter, but what is likely to happen next quarter and why. Imagine identifying cash flow issues before they become crises. That is the shift AI enables. Accountants move from record keepers to strategic advisors. Real-time business intelligence pushes this even further. AI systems monitor financial performance continuously. They alert accountants to emerging issues the moment they appear. Instead of reacting after the damage is done, professionals can act proactively. This changes the entire relationship between accountants and clients. Advice becomes timely, relevant, and valuable. Financial reporting also benefits dramatically. AI can analyze large data sets instantly and generate customized reports tailored to different stakeholders. Visualizations make complex information easy to understand. Decision makers no longer need to dig through dense reports to find insights. The story behind the numbers becomes clear. Another area where AI quietly outperforms humans is fraud detection. Traditional auditing relies on sampling. Only a portion of transactions are reviewed because reviewing everything would take too long. This creates blind spots. AI eliminates those blind spots. It analyzes entire data sets looking for patterns that do not belong. It spots anomalies humans would miss. Suspicious transactions are flagged instantly and investigated before they escalate into serious losses. This capability fundamentally changes risk management. Instead of hoping fraud will be caught eventually, organizations can detect it early. Compliance becomes stronger, trust increases, and audits become more effective. Audit processes themselves are evolving rapidly. Major firms already use AI to automate audit planning, scheduling, and risk assessment. AI identifies high-risk areas early, allowing auditors to focus their expertise where it matters most. The result is faster audits with deeper insight and less manual labor. When AI is combined with technologies like blockchain, audit trails become even more transparent. Every transaction modification leaves a trace. Anomalies stand out clearly. Audits become less about searching for problems and more about verifying intelligence. AI also supports accountants in ways that go beyond numbers. Document management and research have traditionally consumed massive amounts of time. Reading contracts, searching regulations, and summarizing documents drains energy that could be used for analysis. AI tools now summarize contracts, invoices, and receipts automatically. Key points surface instantly. Accountants can identify risks and anomalies without wading through pages of text. Research and compliance work has also changed. Generative AI tools assist with regulatory research, interpretation, and communication. What once required hours of searching and reading can now be done in minutes. This does not eliminate the need for professional judgment, but it dramatically accelerates the process. All of these improvements lead to one unavoidable conclusion. Productivity skyrockets when AI is integrated properly. Firms that adopt AI handle more work with fewer errors and lower costs. Data organization improves. Payroll expense processing and reporting become smoother and more reliable. Quality increases alongside efficiency. Yet here's the most important truth, and this is where many people get it wrong. AI does not replace accountants. It exposes the difference between low-value and high-value work. Humans are still essential. Professional judgment, ethical reasoning, client communication, and strategic thinking cannot be automated away. AI enhances these abilities instead of replacing them. The accountants who struggle are the ones who cling to old workflows and define their value by tasks machines now perform better. The accountants who thrive are the ones who let AI handle the routine so they can focus on insight, strategy, and advisory work. So what should professionals actually do right now? The first step is awareness. Identify which tasks consume time without creating value. These are the tasks AI should handle. The second step is investment. AI tools designed specifically for accounting already exist and continue to improve rapidly. The third step is upskilling. Teams must learn how to work with AI, not against it. Understanding how to interpret AI outputs is just as important as using the tools themselves. Performance must be monitored continuously. AI systems improve over time, but only when guided and reviewed by humans. And finally, accountants must intentionally shift their focus toward strategic work. This is where long-term value is created, and where AI becomes a competitive advantage rather than a threat. The future of accounting is not about replacing humans with machines. It is about amplifying human expertise with intelligent systems. Those who embrace this shift will work smarter, serve clients better, and build stronger, more resilient careers. Those who ignore it will slowly find their skills commoditized. And now you can see the real truth. AI is not coming for accounting. It is redefining it. The question is not whether AI will be part of your profession. The question is whether you will use it to lead or let it leave you behind.